Hey guys, hope you and your families are doing well. Going to share with you some of the timeless principles of volatility contraction patterns in this video. So we've got two separate charts. They're about 16 years apart. The top one is Melly and the bottom one is Gatos Silver, stock that I'm currently long. And by lining them up like this, I'm going to be able to explain the similarities between them and some of those timeless principles when you're looking for VCPs. So let's just do an overview first and then we'll start going into the weeds a little bit more. So both of them have three contractions that are built higher low. So with Melly here, we have one contraction rally, second contraction rally, third contraction rally, and similar with Gatos Silver, one contraction rally, second contraction rally, third contraction rally. So that's nice. Each of them also have a shakeout type bar coming through, or collection of shakeout type bars coming through with strong reversals. So with Melly, it's actually on the earnings. You see this here, you have a really strong reversal bar coming through with a little pop up in volume. It's around about 30-day average volume, and there were a couple of demand tails the day before. It's a little bit more pronounced on Gatos Silver. See the strength of this bar coming through, and take a look at the volume coming through there. Really good to see. So I call this bullish synchronicity, where you have a widespread candlestick on a relative basis, and the volume is confirming the strength of that move. Now what's quite important with a VCP, and you'll often find the best of the best ones have somewhere between 3 contractions and 5 contractions. Three is a very nice number. You can ask Nikola Tesla about the power of number 3. But what you're then looking for on the contractions, which ideally should be higher lows, is dry up in volume. I'm a very visual learner, so I like to think of volume stair stepping down. So if you take a look at Melly here, do you see how the volume is stair stepping down, and that black line is the 30-day moving average on the volume. See how the volume is just stair stepping down. Then same with Gatos Silver here. See how the volume is stair stepping down on the contraction. Now that's good, especially if the candlesticks overall are relatively tight. They're not really widespread candlestick, what I would call bearish synchronicity. So you're looking for on the contractions higher lows to build, multiple tight candlesticks, and ideally the volume is just stair stepping down as well, and then several days at least below the 30-day average. Is very, very healthy. Now what you would like to see after that contraction is a nice reversal bar on volume as well. So you can see with Melly here, you get this nice reversal bar coming through. Take a look at the volume, really nice to see. Similar with Gatos as well. If you're anything like me, you'll go to bed and you'll just see charts in your sleep, as you'll just have these kind of mental frameworks, mental images of thousands and thousands of setups, and you'll be like, oh, this stock's looking like that, oh, it did that. So it's kind of eerily similar how close these setups really are. So then anyway, you'd like to see some nice volume coming through, some bullish candlesticks or bars if you're using bars coming through on the reversals, and then it's a similar process as well. So you'd now like to see another higher low being built, and it's the same characteristics. I'm looking for multiple tight candlesticks, then preferably holding one or more key moving averages, and the volume just stair stepping down. So this volume just stair steps down here, then you get nearly the lowest volume bar within the base, and it's just sitting there really nicely, pretty much an inside bar on the 1021 EMA. Now with Gatos Silver here, the volume just stays below the 30-day average for around about 4 days or so. I actually bought it coming through the high of the 9th of January here, so I was a day early to the actual breakout. The breakout came 2 days after, 2 sessions after I was in it here. It can happen very easily that you're 1 or 2 or 3 days early to the actual breakout if you're looking for these very tight pivots. But you're looking for structural higher lows to form. Invariably, nice looking VCPs will have 3 contractions or 4 contractions. You may get out to 5, but that there is a little bit rarer. But some of the key points to be looking for is the stock to clearly be in the context of an uptrend, meeting the Minervini trend template. Even better if you can, this is a free tool on TradingView, search Jack Quesella's RS line, you'll find it. Even better if the stock is hitting 52-week highs before the breakout, and you'd also like to see that RS line in the context of a healthy uptrend. Now the RS trend didn't look like it's in a healthy uptrend there because I've squished the chart, so I can get them both in. But you want to see RS context of a nice uptrend. Ideally it's getting some 52-week highs. That means the stock there is a leader versus the market as well. You'd like to see volume coming in on the rallies during the base, volume drying up on the contractions, and then over in the pivot, this is where you're almost looking for a mini Davis box in a way, just where price goes sideways to down. The ones that are wedging up are much more difficult. See how this is wedging up into a pivot. See, that is subtle. You train your eyes to it. But see how this is wedging up into a pivot, where this is just sideways to marginally down. You see Gatos Silver here as well. So it's just basically drifting sideways 3 or 4 sessions. That there is nice. So you want to avoid preferably the ones on. See how this is wedging up into the breakout? So you may have heard that term, wedging up. So ideally, just a nice sideways contraction to down, setting up on one or more key moving averages. The ones that I use are 10 EMA, 21 EMA, 50 SMA, and I also have the 100 and the 2 and the 200 SMA. And then what I like to look for is what I call a trigger bar. So a trigger bar is basically when you've seen these contractions happening. So you've got 1, you've got 2, you've got 3. A trigger bar is then, say, into the third contraction. It's a high low, price is getting nice and tight, it's just moved sideways, the volume really dries up, it's a very tight candlestick. That's just an indication that there isn't much supply that is coming to market. Then I don't want to go too far in this video, but then in terms of initial stop loss placement, invariably for me it will be the low. It will be the low of the final contraction, and or underneath the low of the trigger bar, which may also tie in with being underneath one or more key moving averages. For me, as a reference point, I like to see the 10 EMA there at a minimum when I'm looking to buy. So just to then kind of back that out a little bit, you see here, I wouldn't be buying here because it's wedging up and the stock's extended from the 10 EMA. So I would like to see it just sat nicely on the 10 EMA, like you can see with a Gatos, like you can see here with a Meli at a minimum. So avoiding these wedging up ones where price is extended from the 10 EMA, I've just found it often leads to better setup. Then if you want to go really into the weeds, why not? I'll show you this. If you want to go really into the weeds, you can also then see on invariably the best of the best ones, you can also then see when you go down to the 1 hour chart. So I like using multiple time frame analysis. So I'll look at the monthly, at the weekly, at the daily, and also the 1 hour. When you go down to the 1 hour, there's a couple of things that I like looking for. So let me pull this up here. Let's see if this works. So I'm just going to pull this up. Go over here like this. You can still see all of the annotations. Can you see the VCP on the 1 hour chart as well? You see how you get 1 contraction, 2 contraction, 3 contraction, and you get some really nice bullish candlesticks coming through. See these bullish candlesticks, look at the volume coming through. See this bullish candlestick, look at the volume coming through, and you also get this contraction. Now in terms of a reference point for key moving averages on the 1 hour chart, I like to use the 10, 21, and also the 50 SMA as well. They are then nice. I'm then looking for that kind of trigger bar on the daily chart. Then when I drill it down onto the 1 hour chart, I like to have a nice clustering of the 10 and 21 EMA and also the 50 SMA on the 1 hour chart as well. But ideally you can see, okay, if I draw it again, a nice, here's 1 contraction, 2 contraction, you actually get 4 on the 1 hour chart, and then see how price just starts tightening up in here. That there is nice behavior to see, especially if you can get some of these bullish synchronicity candlesticks. So I hope that that video there was useful for you guys. Thank you very much for watching, and I'll see you in the next one.